Wondering how to communicate exactly what's happening economically and what that does to affect the local real estate market? Today, I've got two of the best with me. I've got George Ratiu with me, the Chief Economist for Keeping Current Matters, as well as David Childers, President of Keeping Current Matters. We're going to give you exactly what you need to add value in a way that sets you apart as a real estate professional. All right, if you're a real estate agent that is wondering, how do I speak about the economic conditions and the things that we're seeing and how it affects the real estate market and ultimately your clients or your sphere of influence, this is the video for you. I'm extremely excited because we've got two of the absolute best in the business. Friend David Childers, President Keeping Current Matters, as well as George Ratiu, see there? I told you, Ratiu, as the Chief Economist with Keeping Current Matters, and newly named, and so excited for that association as well. I'm really looking forward to this from a couple of reasons. David and I, we've talked about this, David, where the information, the agent that has the best information, that has the ability to present that in a way that adds value to their clients, is the agent that will win in this marketplace. So, George, I want to just kind of hit some of the hot topics that are going on right now, and maybe you can kind of frame how they affect the real estate market. And then, David, if you can jump in and talk about maybe how agents might want to position this and they're presenting it to their clients, if you don't mind. So, George, let's start with, obviously, we've seen a lot of wild things going on in the banking industry these past few weeks. Can you speak to a little bit about what's been going on and how those things actually affect the real estate market?
Sure, Jimmy. So let's start first of all with the fact that we've had a year, and in fact today, right, is the day which the Federal Reserve announced its latest rate decision. What's worth remembering about this is March 2022, last year, is when the Fed acknowledged implicitly that inflation was going to be a big deal, after spending most part of 2021 saying it's going to be transitory, not a big deal. A year ago this month, they said, okay, this is going to be a big deal. And they kicked off that acknowledgement with their first rate hike at 25 basis points, which was followed by 4 much more aggressive rate hikes, 75 basis points each throughout the year. So what we saw in basically their March meeting today was the fact that they announced their 9th rate increase. So we'll start with that because that's really relevant to what we've seen in the banking sector. And especially to your point, the last couple of weeks, we saw the failure of a major U.S. bank, Silicon Valley Bank. We've seen some of the other banks, like even in Europe, Credit Suisse having issues. So what really has snowballed for some of these banks was exactly the Fed's monetary tightening impacting rates across financial markets, particularly in the bond market, where a lot of banks were keeping their assets in what would normally, in normal times, be safe investments. And so what these failures have done, particularly for Silicon Valley Bank, is put a big question mark about the stability of the entire financial system, which really is so critical for housing as well, right? Because as we know, the majority of Americans purchase a home by financing, by getting a loan. So in a sense, a lot of the activity of the last 2 weeks have been both on the part of the Fed as well as the regulators like the FDIC and the government, obviously directly involved through the Treasury, has been to, number one, shore up any at-risk banks. Why? Directly to ensure that the financial system stability continues, right? They didn't want to see a repeat of what we saw in 2008 with Lehman Brothers, where one bank's failure may implicitly spill over and threaten a whole bunch of other institutions. So the main takeaway ultimately for us today is, number one, the government and the Fed together are committed to ensuring the stability of banks. Number two, we saw the Fed put in place a new banking lending facility program to ensure that banks that need additional boost to their reserve, they have access to this, they can get the money. And three, and I think importantly for housing, the Fed's decision today, which was a 25 basis point hike, highlights the fact that the Fed remains committed to taming inflation. In fact, it sees inflation still as a much bigger threat to the economy overall than these particular bank failures.
Yeah. So when we're seeing that, where we're seeing those effects that are happening as far as those rates going up, David, maybe you could speak to the agent's perspective. I mean, when you're with agents all the time, all day, and you're talking about these things, presenting this from a standpoint of how does this affect, if you were the agent, in other words, what would you say to that client?
Yeah, it's a great question, Jimmy. And one of the reasons I'm so excited that George is on the Keeping Current Matters team now as the chief economist is agents having that perspective and that background around what's happening. So I want to go back to something George said, but also what is ahead. First thing that George said, there's an enormous amount of uncertainty in the economy. And certainly with agents, right? We may look at it and go, gosh, I don't know what's ahead. That's always the time where we can be the deliverer of perfect advice. I mean, of our expert opinion about the market. Okay. And so that's point number one. It provides opportunity. Point number two is long-term interest rates are going to follow inflation. And what George say, the Fed is working hard to tame inflation. And I think ultimately what we'll see out of this latest round of Fed funds increases is what they said is, hey, this might be it.
Right.
And so if we start to see inflation coming down, we should expect long-term interest rates to come down. So for us in real estate, that's a good thing. Homes become more affordable. More people can buy a home. More buyers that maybe are on the sidelines get back in. And so I think that's the optimistic view that I would hold as an agent looking at what's happening in the world, so to speak, and in the economy.
Yeah, you would assume, obviously, with the 9 rate hikes we're talking about, that the hardest part of that it should hopefully be behind us. Of course, we never know, but we're heading to a place where now, with them having that a little bit more dovish outlook of, hey, we may be nearing the end of these rate hikes, that is obviously opportunistic as far as creating opportunity in the marketplace. Yeah. Speaking to that, George, if you don't mind, so does that make now a good time to buy, or should people be holding off right now? What is your opinion as far as the real estate market right now?
That, I think, is in many ways the question of the season, Jimmy, for so many people, right? Particularly if you're a buyer, you have spent 2020, the second half through early 2022, asking yourself, number one, will I ever get a break? Number two, will I be able to afford anything, right? That question became a little less intense in the second half of this past year. But now we've been in a period in which mortgage rates have been bouncing around 6 to 7% in that window for at least the last 6 months or so. So if anything, buyers are saying, is this the new normal? And I would wager to David's point, what we're going to see is a leveling off at some point of mortgage rates, right alongside inflation. But more importantly, and I think for buyers, this is the key framework to keep in mind, because I think it's so important to, in the worry of, am I timing the market right? Here are my key things to keep in mind. Number one, home purchases tend to be driven by life events more than anything for so many people, right? We treat sometimes a home purchase, rightfully so, as an investment, but I think it's worth remembering it is also a place to call home, a place to raise family, a place to provide for children, for the family. In that regard, I think it's important to keep the following things in mind. Number one, am I in a stable position? And I think this is relevant for so many buyers. Financially, do I have a down payment? Whatever that may be. Do I have savings? And what is my time horizon? Do I plan to be in this neighborhood, in this community for the next roughly 3 to 5 years? Why do I say that? Their transactions cost, right? So if you're going to buy a home this year and then you're going to move next year because you expect your job to change, right? That might not necessarily make sense. So if your answer to those is yes, I'm going to be here, I have enough savings, I have enough down payment, the reality is there's not necessarily a better time that you can find to purchase a home. Mm-hmm. Yes, in your neighborhood, home prices might come down another 5%, maybe, but they could also go up. We're seeing, even in this national environment in which we saw existing home sales, right, this week, national prices, the median was down year over year by a little bit. Even in this environment, there are communities and neighborhoods where demand is high, multiple offers are still on the table. So I say that to balance a little bit this idea that prices are necessarily going to go down. The other thing to consider, and I think importantly for buyers, if you're not answering yes to all these questions, then the short answer will be, it may be better to wait. And I think that's just an important, piece of advice to give some buyers.
Right. Hey, speaking of those life events, David, let's talk a little bit about, I was talking to someone yesterday that said, and this was someone that had an expensive home, primary residence. They sold at the peak and they were like, hey, we'll just get into something else. And they're actually renting right now, just trying to find something. Can you speak to, who it does make sense to right now? I know there's a lot of people that, like you say, the life events, or whether it be maybe first-time home buyers or people that have been on the sidelines. What are your thoughts about that from an agent's perspective?
Well, I think George hit the nail on the head. The long-term homeowner, this is an opportunistic market. And I would say, there are very few markets in this country, real estate markets over time, that we would say to someone, if you're going to be in the house for a year, go ahead and buy a house. We'd probably say, no, if you're going to be here for a year, it's probably best for you to rent. So I think it's understanding what is important, time frames and all this. But for the long-term homeowner, there's opportunity. Now, I always think about it this way. I think we get caught sometimes in our business trying to time the market, or people timing the market. And we have to remember, in real estate, it's time in the market over time that homeownership works. Homeownership always wins. There was a recent statistic, we published it at Keeping Current Matters. Over the last 30 years, the average in this country is 398% in residential home price appreciation. That's amazing. That's amazing.
Right.
There's that opportunity. So I think for the person that's looking to say, hey, we're going to be in this house in probably some kind of time frame, several years, that it's a great opportunity to buy. Now, I do think this. I think if you look back over the last couple of years, and I've said this before, maybe when we were talking, Jimmy, a lot of people found it impossible to buy a home. They lost out in multiple bid, scenarios, or whatever the case may be. And now there's no doubt that there are affordability challenges and things like that, but it's possible to buy in this market. And I think we need to be advocates for that, versus when you go home at night and you turn on the news and you get sold sort of a story that it looks like it's not the right time.
That's real. I couldn't agree more, David. And with all of that in mind, George, what do you see as far as forecasting for the rest of this year and going out into the future?
So, Jimmy, my view here is really colored by the market fundamentals. Specifically, what do I mean by that? We started this year with a significant shortage of not just existing, but especially new inventory. And that's something that's not new to this year. In fact, even pre-pandemic, we were already in an undersupply market. The pandemic didn't do us any favor in that regard. Why do I say that? For a lot of people who have compared, or at least tried to understand the last couple of years, the market through the lens of 2008, right? That's been sort of the main baseline. We're not in the same boat. This undersupply in the market continues to create an environment in which, by and large, the number of buyers interested in buying a home cannot find enough properties. So I say that because that, in a sense, sets for me the expectations for the year ahead. Now, to add a little more context to that, I do see inventory, by and large, nationally improving. A lot of that really coming from homes that are on the market, lingering longer on the market. We've seen new listings actually pull back during the winter months, which A, is normal, it's seasonal, but B, this last winter, it was even so much more steeper in a sense, or aggressive than we've seen prior years. I think a lot of homeowners who would have sold have, in a sense, gotten cold feet because they're worried they missed the peak of the market. They're not going to get as much as their neighbors did. And in reality, the equity homeowners are sitting on is at record highs. So on one hand, my expectation is buyers will continue to be interested in purchasing. And we've seen that, right? New home sales for a couple of months were up month over month. Existing home sales came out and they're up from the prior month, even though still down year over year. So there are clear signals that buyers are still in the market, even with affordability challenges. The big question for me is, and I think this is where I'm a little bit uncertain on the outlook, how are sellers going to respond this spring? As you know, spring is such a critical time for the rest of the year. If we have great amount of inventory coming online in the spring, we have a solid summer season and a great season ahead. So that's, to me, what I'm keeping a very close eye on.
Yeah, that's good stuff. David, obviously you and I have talked about chaos creates opportunity many times before. Where do you see opportunities for agents in the marketplace possibly right now?
Let me say this, Jimmy. I would go back to this analogy. You ever been somewhere and they do a drawing and, my daughter, she does plays and they do these baskets, at the end of the play, and they always say this. They say you must be present to win.
Oh, that's good.
I think in this market, the agent that is present is going to win because let's face it, there are a lot of agents going, hey, I'm not sure how I give good advice to my clients right now. I'm not sure what's ahead for this market. I'm nervous about everything happening right now. So being educated, having great answers, scripted answers to the ones that consumers are asking right now, which, oh, by the way, are good questions to say, hey, how's all this going to affect housing? I think that's a question we need to be prepared to answer. But I have no doubt the agent that is out there that is present will win in this market.
Yeah, it's so good. Listen, I'm really excited, George, for you to be a part of the Keeping Current Matters team. As far as the value that Keeping Current Matters brings to the entire industry, and now with adding you, just a whole other layer. Really excited to see what that looks like over the coming years. And David, I appreciate everything. Listen, if you haven't checked out Keeping Current Matters, just go online, check them out, and it's a great opportunity. Anywhere in particular you would have them go, David, if they wanted?
Yeah, they can go to trykcm.com. You can start a free 14-day trial and get all this information and use it with the clients you're working with.
That's exactly right. All right. I know that you guys got some value out of this. Reach out to George and also let David know how much you appreciate him. And we'll talk to you guys soon. Thanks for watching the video. I specifically chose the video below for you because it builds on the one you just watched. I hope it's helpful, and I'll talk to you soon.